What's up, guys? I just thought I'd hop back on the YouTube channel just to talk about some important, key concepts that relates to trading and, just trying to make money in the markets. And so what I want to talk about in this video is just management, trusting the math, trusting the facts, and ultimately just acting as a casino when you're trading the markets because, you always want to have that edge and the probabilities in your favor. And so, yeah, what you want to be doing in the market is pursuing asymmetric opportunities, right? And what I mean by that is, when you're entering a trade, you know, you should always define your risk, and the risk should be very minimal, right? As small as possible, as tight as possible, for essentially a big reward. That's what makes it an asymmetric opportunity. And so, I want to talk about, just live examples, some trades I've taken this month, some trades I've taken today. I'm going to show you some wins and losses, and overall just, how I live out this principle of always, seeking out asymmetric opportunities and always trying to have the math and the arithmetic in my favor. If I had this kind of information or education when I was starting out about a year or so ago, I think it would have been very helpful, very beneficial. And so, without further ado, let's get right into the video. So to start off, what you always want to be doing, if you're fairly new to trading, is always, assess the market context, any important economic news or catalysts. And so overall, we see that in the market on the cues, we can see that, it's approaching a key level. And so far it's showing strength. It's just been making higher highs so far. And so what you want to be doing at this point, is to see how it reacts at this level. Is it going to reject it? Is it showing signs of bullishness, signs of rejections? And overall, as you're monitoring your trades and your stocks, you always want to be monitoring side by side with the market. And so overall, from the market open today, I saw that basically we were still holding this uptrend, making higher highs, and kind of chopping with bullishness. And so looking at the trade I took today, which netted me about $800, $900, for the first, say, hour or so of the market open until 7:45, what NVIDIA does is just chop, right? Just going side by side. But you can see that, through the price action, it's showing signs of bullishness and relative strength compared to the market, which has also been chopping and going side to side, right? And so after it makes a small trend line, what I decided to do to pursue, a very good risk to reward is to enter here at 125.6 and basically risk a really, really, really tight stop loss. I was risking 40 cents, and so I was risking 125.20. If the price of NVIDIA went below 125.20, I would have gotten out of the trade immediately, right? So it's a very tight risk, and I'm essentially setting my target, for a 2R, 3R trade. And so I'm risking 40 cents, and my ultimate target was around 127, which is about $1.30 of a price movement that, the price that the stock needs to go to reach my target. And so $1.30 move up with 40 cents of risk, a 40-cent stop loss would be around a 3R trade. And so it was a great risk to reward, great asymmetric opportunity. And overall, when I say trust the math, trust the arithmetic, what I mean by that is over the next 100 trades, over the next 1,000 trades, if you keep pursuing these asymmetric opportunities, such as 2R, 3R, 5R risk to reward ratio trades, you can essentially have less than a 50%, 40% win rate as to, in terms of the win rate of your trades and still be profitable. Because if you do the math, let's say you're taking a 3R or a 3 risk to reward ratio trade every time you take a trade, right? You can essentially win 30% of the time on all your trades and still end up profitable. Let me demonstrate. If you have 100 trades and you win 30%, you won 30 trades, right? So you have 70 losses. But on each of the trades, let's say you profit $3, whereas on each of the losses, you lose $1. If you lose $1 on 70 trades, that's $70 that you're in the hole, that you're negative, right? But on the 30 trades, if you're winning $3 on each trade, that's a $90 profit. So $90 minus $70 is $20. And so with that principle in mind, you can see that, it doesn't matter the numbers, you can add a zero, minus a zero. At the end of the day, the math and the probabilities are in your favor when you stick to, this kind of trading plan and risk management system. And so ultimately, that's really the holy grail for me. It keeps me from emotionally trading, keeps me from making any impulsive decisions. I just trust the system. If it doesn't hit my target, I just wait until it does or until it hits my stop loss. Every time I'm in a trade, I'm defining my risk, and ultimately I'm indifferent to where the stock goes. Yeah, I'm trying to get all of the edge and probabilities in my favor by, looking at the market, looking at the context, looking at the news, looking at the price action of the market, the S&P 500, the Nasdaq, and all of that. But at the end of the day, you still never know what the stock is going to do. And so what you can do is trust your levels, trust the math, and ultimately just take the trade unemotionally. So that was a good trade for Nvidia. Let's take a look at Google. So with Google, I enter around $167.40, right? And I set my stop loss at 166.6. So essentially that was about, an 80-cent risk for, I was looking for a $2, $3 trade, which essentially makes it a 2-hour, 3-hour trade. But as you can see, it's been holding it for about, 30 minutes or so until it finally breaks my stop loss. Right when it breaks my stop loss, I get out immediately for a loss. And, that's what comes with trading, You can see that it quickly reclaimed that level. And so, am I smacking myself on the back for, for what the stock did? No, because, I know that over time I can take these losses and still end up profitable. And essentially how I'm trading is, I'm not trading with my money or profits in mind. I'm just trading my system, trading my plan, and, not being emotional about it. And so on Google, I took a loss. It was a small loss, about $600. So still profitable from those two trades, right? As for Amazon, I'm still holding this trade. We'll see what it wants to do. I've entered about a couple of days ago on Thursday at 176, and it's pretty much gone up to 178 and back down. And so my initial risk was 174, which is $2. So $2 of risk for a $6 or $14 reward, which essentially makes it a 4-hour, 7-hour trade. And I'm looking for Amazon to fill this gap. And so with a strong market, pretty much placing a bet on the fact that Amazon will fill that gap. And so I've also adjusted my stop, as you can see. I've now adjusted my stop to my entry price. So at this point, I can't lose any money in this trade because essentially when it hits 176, right at my entry price, that's a break even for me, and I'll get out of the position with no loss. And again, with that break even stop loss, I'm essentially looking for 184 and then 189, right? Right now it's at a price of 177 or so. So yeah, that's kind of how I approach trading. I just trust the math, trust the numbers, and yeah. What else did I want to talk about? Risk to reward, some live examples, some wins and losses. You don't want to be taking a trade just to take a trade, right? You want to, be patient and kind of act like an eagle, You kind of hover around, look at different stocks, see what's gapping, what has earnings, and kind of see with the overall market, how the trade is moving. And overall, when it's at an important key level and you have conviction in your trade, that's when you want to strike, right? And so, yeah, I encourage you guys to, stay disciplined and, just position size small, right? Don't care about the money, don't care about your P&L. Just Just trade the system, trade the numbers, right? Act as a casino, or you'll end up as, those gamblers at the casino, right? The main reason as to why you get emotional or impulsively get out of position too early, or you hold hoping for the stock to come back, you may be sized in way too much, right? If you're sized in appropriately and you're only risking a couple percentage points out of your account, there's no reason for you to be shaken out emotionally. And that's something I'm always working on too, but I have been getting better at it. And yeah, if I had this kind of information, when I was trading, when I was starting out, I think it would have been very helpful. So hopefully this helps out any of you guys who, are continuing to trade or are thinking of trading. This is pretty much the holy grail that I've been abiding by so far, and the main principle that I've been trying to stay disciplined towards. So hopefully you guys found some value. Please leave a like for the video, and I'll catch you guys in the next video. Peace.